Yes, guys, hello. We're back here again with the weekly close for commodities, gold and silver, oil, platinum, sugar, all that good stuff, all that good jazz here. As always, please follow me on Twitter and on YouTube. And if you like what you see, give me that subscription, even more appreciated. But yeah, weekly closes for gold and silver. Big day for gold and silver with the non-farm payroll coming out with a huge miss. Dollar tanking 1%, and as you know, a 1% increase or decrease in the dollar or the DXY is big, big money. We are talking billions of dollars leaving the 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 um, the dollar more or less. So let's dive in to see where we are in time. I have cleaned up the chart a bit, so I only have the trend lines and the stuff that I think is important as we speak, and then we can add more on. Let's see where we are here. Silver. This is on the daily because I want to show you. We have our long-term macro squeeze. Yes, we know that. We have seen that tons of time here. That one, there it is. Okay. Now that we're updated on that, we're zooming in to see what price action lies ahead here. We have I want to do it like this. We have this red support, a resistance here. It's a minor big one to take out in my view because when and if we take that one out, we will go and test that long-term golden trend line. Where are we now? We are, as we talked about when we came here, I said I really want to see a pushback here to make the possible right shoulder, and that's exactly what we did. And now we want to break that blue minor neckline right here, right now. Why? I will let you know. We could do the measured move upon a possible break, and that's actually gives us a breakout of that long-term golden trend line. So we really want to see this one play out to the upside. And as you can see, the past 15 trading days has been range bound quite heavily. Nothing has happened. 2% up today. Big day for silver, obviously, while the dollar is down 1%. So yeah, this is the one to look for me right now. So we want to get above, let's call it 23.7 on a daily close. Then that neckline should trigger a move, a possible move all the way up to here. And yeah, then maybe we're off to go. Who knows? We will see, but this one is definitely what to look for right here, right now. Same thing for gold. I have cleaned up the charts quite a bit. We took out that blue bull flag, which is very ideal, and now we're just holding quite nicely up here as well. I want to show you on the 4-hourly just to show you my ideal take. This move here, beautiful. I would have wanted to see more of a bullish consolidation to the downside, so we have some sort of bull flag or whatever. But now we have these higher highs. Again, this connects, that possible. This is also a bull flag where we can roll higher. But obviously, when we get these shorter time frame higher highs and higher lows, that's typically when we are possibly due for a rollover. So yeah, I would have preferred this one here, but still, this is decent to see that we are holding. If you look at the weekly, I want to show you guys here, we're still holding roughly the 2K level, and we're not getting any hard rejections like we have done in the past. Once we got up here, you can see here on the weekly, ever since these rejections that we got last time, we're not seeing that. We're not seeing any big wicks on the weekly. Very encouraging to see, and this could be some sort of higher high, higher low rollover, and then we will go and break the all-time high, or at least touch it. So still all fine, and the path of least resistance, looking at it from a big perspective, is still the touch of the all-time high. We have done all the hard work here, and now the path of least resistance is definitely 2075. Gold to silver ratio, one of the ratios you should be looking at every week, at least once every week. Big down day today in the ratio, down 1.6%. Again, after touching our big level at roughly, let's call it 88, a tad below 88. And yeah, still the double top is very much in play, and we had a huge rejection today all the way down. What is our preferred scenario? It is that we're going to, this is our double top, and then we want to slowly get below this long-term golden trend line right here. and so we can have silver in favor of gold. But as you can see, we have a lot of work to do, a lot of supports still, and yeah, so it doesn't happen all that easily. I will add this one though. If you can see here, we have some sort of green support here, which I think will be the next one to crack here before we can go lower. So we will leave it in. And yeah, definitely a day with a lot of momentum to the downside. Again, NFP, non-farm payroll, was a huge miss. So people are not expecting further rate hikes. Speaking of a huge miss, and where you can see that on the charts is the Dixie. And yeah, just look at the day here. Boom, all below these levels from over here. And yeah, this is definitely looking bearish for our beloved or hated the dollar. Um, Again, there's still some possibilities that we have, some minor low lows, but given the momentum here, I think we are about to go into um, some low here at some point in time. I will, for the next video, add in some trend lines that maybe could suggest where we're going. But the obvious one is that pivot high here. So I think that's where we will find support at roughly 104.6, maybe a tad higher, but roughly here we should find some sort of support, and yeah, then we will see how the dollar reacts. But today definitely, this was bullish consolidation. Now we have actually closed way below the range, as you can see here. So bad day for the dollar, good day for gold and silver, and also a bad day for the 10-year rates. Rising wedge here, as you know, we've been talking about. And also what I've been saying a lot is that if you start to see these move to the upside and you start to come back into the wedge, you often visit the lower side of the trend line of that wedge. And this is exactly what we saw today. And please follow me here onto the 1 hourly, very short term, but I want to show you. This was the NFP release, and we actually broke the trend line, and now we're actually sitting right below that long-term rising wedge. And if this is the case, then we should start to roll over next week. As breakdown, retest on the 1 hourly and resumption. So yeah, definitely worth to watch here if we can stay below that rising wedge, which will be very bearish, very bearish for the rates. And that means that the first target that we will go and visit is 4.33. That is the next target here until proven otherwise. Oil, yeah, oil. Again, you can see the blue resistance here coming across all the way, and every time we touch it, we just getting rejected. As still, the path right now for me, looking at this one until proven otherwise, is actually the previously discussed move all the way down to roughly 75 to retest that major breakout we had back in August. And that's also I think the measured move for this head and shoulders is also somewhere around here. Makes total sense. So yeah, I think oil, where the highest probability for oil is now is to go from 80 down to, and drop $5, give or take. It is what it is. Palladium, again, this falling wedge. I will not go much into detail, but I think very many people are very short, and I do think that in some way or another, I think the shorts here will get blasted to oblivion. That's my take. We are at this 25-year-long highs there, correction there, and now we're touching over here. So this is a falling wedge, which is with the highest probability always a move to the downside, to the upside at some point in time. But still, we have to wait for the confirmation. Platinum, fantastic. Short-term price action here. That's the squeeze, and we have a weekly close above. And if you've seen my post on Twitter, I said at some point that we have 4 stages. We want to break out the yellow wedge here. Then we want to take this high here at roughly 1K, the red zone, and then obviously the last but not least, the major neckline. And this is the first step, and we have done that now. So my view is that I think we're going to visit roughly 1K here within the next few weeks. And then we will see. I have the 1K as the big level to get back above. So exciting times for platinum. Also a bit of a bullish momentum here, short-term stuff here on copper. Again, the lows that we've been looking at for a long time held here. We're getting a very big bounce here actually. But for now, it's only, in quotes, a retest of that broken double railed support resistance, support now resistance. So if we get up here and we start to roll over, very bad. And the bullish take is obviously, as all of you know, if we are coming into the apex of a major macro squeeze there, you can sometimes see, this false breakdown here, and then you snap back up here like a slingshot because people are short and they are shorting, and then they're short the retest. And if it doesn't drop, then they have to cover very quickly and you get a very big snapping price right there. But again, that's not something that we are going to, the path is still with the high probability retesting resumption until proven otherwise for copper. But it would be nice though, right, to smoke all these shorts and then just blast to the upside. Huh. Nat gas, again, decent week, breakout, retest, resumption on the weekly here, and we are just fighting the pivot low there at roughly 3.6. And yeah, we are above a major trend line here. And I think, yeah, heading into the winter, I think this is going higher. How high, I do not know. But for now, every resistance that we are facing is getting taken out as we speak. Again, if we can take out this level here at 3.6, then I think we have a move all the way up to roughly 4.7. Again, winter times. Let's see if we can get there. Not much detail here. This is the European one, the Dutch TTF natural gas. Again, I think the path of these resistance is these lows over here. The first one comes in at roughly 63, and I think we will kiss that at some point in time. We have done all the hard work here, and now we have, I think, a move to up to here. And if that one gets taken out, then we could have some very, very, very high prices. Heading into winter. I'm not calling for like going all the way up to like 350, but in the winter we could definitely see us going into maybe into the hundreds before it start to get a bit more warm here in Denmark and Europe. I also want to show you the long-term trend line here, which we looked at, held to perfection. So beautiful long-term technical level, and we're bouncing up from that. Coal, we had this very skewed at this point in time, possible inverted head and shoulders neckline here again. Now we're closing below, so all this stuff is invalidated. And now it is as simple as it is. We have the highs there, and now we are probably going down to here at roughly 108, which is where we will see a bounce of some sort. How high, I do not know, but we will definitely see some buyers here at roughly 108, give or take, for coal. Oh, Bitcoin. I want to show you that rising wedge right here from here, and now we actually tagging it, getting rejected at that lower side from that trend line. Still, this beautiful inverted head and shoulders is still very much in play. You can see the breakout, retest of neckline, and now we're coming up here again. So yeah, even though we have resistance here, let's see how it happens. But until proven otherwise, the 32.8K measured move is still very much in play and should be somehow expected, I think, to be hit at some point in time. Looking at the daily, you can see here, this is the test of that lower side of the rising wedge. Boom, boom. And now you could actually have some sort of rising channel here, bullflagging here. However, if we get below, then the next move is obviously down to, again, these highs over here at a tad below 32K for Bitcoin, which still will be in a very bullish mindset. Don't get me wrong, but that's probably where we're going if we cannot break that wedge. Okay. Let's see here. We have the uranium spot price. I cleaned it all up just to show you. We are at the Fukushima highs. We had a bit of a melt up here. That if whenever you get such a move here, that's a melt up. And that's exactly what we got here. So I want to prefer to see just stay here, bullish consolidation, even go a bit to maybe more to the downside. That would be perfectly fine, and then we can scoop up again here just to make some sort of base here for the next, I don't know, I don't care, 3 months, I don't care really, and then we can scoop higher. I also want to show you, as you know, that one right there we have had on for a long time, and we haven't retested that major trend line as well. We could even actually make it golden. There it is. So again, we could have that move down to roughly 62 that we have been talking about, and still be in very, very bullish shape. And but people, when we go from, if we go from 73 to 62, people will start to call the renewable market over. And little do they know, this is just pure technicals. And remember, we are at a major high, the Fukushima high. Again, very big psychological level. And people are just waiting to see what happens here, what happens here. So this is a major big level to go through. Do we blast through? From a pure technical point of view, no, we don't. But yeah, let's see what happens. I wouldn't be surprised to have that retest and then resumption. Again, that would be purely textbook stuff right there. Sugar. Again, just overall strong. Again, you can also see silver and sugar on a longer time frame is somewhat correlated. And I think, sugar just the weekly candle this week, very bullish, and we are above the highs here at 27.4. And the bull flag target is roughly 30, 34. And again, we have done all the hard work here in that major channel here. Also, we had the falling wedge going a bit further back, but still, we are going to visit the highs here. The path of least resistance is these highs here at roughly, the high peak is 36. So that is where we're going before any major pullbacks, in my view. It just keeps grinding higher. The trend is up, weekly trend is up, monthly trend is up, and I think silver will follow with a bit of a lag. Okay, soybean here. I want to say, I'm sorry, but I had a neckline, went from here to there, and called that a head and shoulders. However, that's completely wrong. Why? Because if this is the head and shoulders, then the pits are here and here, and I connected it here without the connection to the neckline there. Clearly wrong. So it gives a bit of a different take that the neckline has already been broken and retested multiple times. So we are still in a bearish mode for soybean. However, look at this golden trend line here that we have had on. We just keep pounding onto it, and let's see if it can get if it gets broken here. So yeah, slight adjustment to the chart there. I will admit that one. Nickel, I have some data glitches here, I think, so I will not go into nickel. Nothing much has happened here. So this is the gold to M2 money supply. Very interesting ratio. That's why I have it on. We've been following this for the past, I don't know, a month on this channel. On the video, silver, against M2 money supply. We are just toying with that long-term 2011 golden trend line here. You can see it here, expanding formation there. And again, if we can get above here, oh boy, that will be the moment we've been waiting for. In this case, and we are above now, but again, yes, we're above, but we need to take out that formation here. Gold looks even better, looks even way better. Again, long term, you can see it here. There it is, all the way down, and we're actually breaking out of a bull flag at that trend line right here, and you can see it there. So the path of highest probability right now is that we are actually going to see gold outperform big time the M2 money supply after this big macro setup right here that is in the early stages right now. And if that is the case, you want to be in gold. I mean, we're also very close to breaking the all-time high in the fourth touch at the moment. We are only like 3-4% below, so this makes total sense. But this is very interesting to me to be a part of this here, if this really is the case, which it is pointing to at the moment, really, looking at the charts. So gold could be in for some big moves here, and I'm happy to be a part of this very early. So yeah, fantastic stuff, to say the least. That's all, guys. A longer video than I have had in mind, but again, I enjoy doing these, and I hope you enjoyed it as well. Leave a comment below, guys, and the weekend is here, so don't be on Twitter. Don't look at the charts. There will be plenty of room to do that next week. Get some fresh air. I know I will at least try to. So guys, have a great one, and we will definitely see you in the next one. Cheers.